My friends, welcome to another edition of the Heritage Wealth Planning YouTube channel. We're going to talk now about Delaware taxes for retirees, the great state of Delaware. Now, I have some personal experience with this because when I lived in New Jersey and I worked in Philadelphia, a lot of people would retire from Pennsylvania to Delaware because the property taxes were minuscule relative to New Jersey or Pennsylvania. And they retired from New Jersey to Delaware as well. Delaware's public schools are not very good. And a lot of people attribute that to their tax base in terms of property taxes that people are paying for those schools being quite low. There's no correlation that one can show in terms of the spending per pupil equals a greater success in public schools. There's actually, if anything, is an inverse correlation for sure, but there's certainly not a positive correlation between the two. However, for you as a retiree or potential soon-to-be retiree, and you're sitting in New Jersey or PA, it's awful hard not to look at Delaware for just if nothing else because the property taxes are pretty minuscule. Now, with that said, let's dive into it. I haven't looked at the numbers yet. Just my own personal experience with clients I worked with in Philadelphia and New Jersey, Pennsylvania as a whole, but certainly New Jersey as well, led me to believe that Delaware is a pretty good state for retirees. But let's find out. So, as always, Kiplinger's. And now we're in the D's, and here's Delaware right there. And it looks like they're saying Delaware is tax friendly. All right. So let's find out here. Let's go see what Delaware is doing. Why are they tax friendly according to Kiplinger's? The first state, Social Security benefits, it's still Connecticut, the nutmeg state. I mean, just last time we talked about this, it said the Constitution state. I always thought it was a nutmeg state. I know it's a Constitution, but anyway. So Delaware is the first state. Social Security benefits are exempt. Taxpayers over 60 can exclude $12,500 of investment and qualified pension income from state income taxes. Again, that's taxpayers over 60. And income above that faces only modest tax rates. Homeowners 65 and older may qualify for a credit equal half of school property taxes, up to $500. The biggest savings of all, though, may be Delaware's lack of any sales tax whatsoever. And just to reiterate myself, property taxes, we want those to be low. Ideally, we'd like sales taxes to be low as well because we can manipulate income for sure. There's ways to do that. You got to do it before you hit the retirement button, but still ways to manipulate income. Can't manipulate sales tax. You can't manipulate real estate tax. So if we can get those two things in our favor, we can deal with income tax later. State sales tax, neither the state nor localities impose a sales tax. Look at that. In response, New Jersey has half the sales tax on many items in Salem County, which borders Delaware. I'm familiar with that area. Income tax range, low on the taxable income from $2,000 to $5,000. So again, taxable income. If you're married filing jointly and you're over 65 years old, you'd have to have $30,000 of gross income before you had any taxable income of $20,000 of where you get hit with any income tax in Delaware. So again, taxable income is after your standard deduction. All right. So if your taxable income is $5,000 and you're with nothing else considered and you're taking standard deduction and you're married filing jointly, that means your gross income is roughly $31,000. In this case, it costs you 2.2% on that $5,000. Not too shabby. High is 6.6 on taxable income above $60,000. So basically, if you're roughly making $100,000 gross, you're going to pay 6.6 on the amount above $100,000 because of the standard deductions, give or take. I'm just kind of throwing numbers out there. Still, that's a lot of taxable income of $60,000 for a retiree. That's a pretty good income stream. So if you're just regular middle class person, you're probably not going to get over $60,000 of taxable income in retirement. You're just probably not. I mean, I could, but most people are not going to. So essentially, they're not going to have a huge tax burden. 4.4 will be your individual effective tax rate and 5.6 joint. Social Security benefits are not taxed. That's good. I'm not even going to talk about railroad anymore because every state apparently exempts them. Taxpayers over 60 or over can exclude $12,500 of investment and pension income. Out-of-state government pensions qualify for the pension retirement exemption. For those younger than 60, $2,000 of investment and qualified pension income is exempt. If you're 65 or older on December 31st, you are eligible for an additional standard deduction of $2,500. So I have a feeling you're not going to pay any income tax to the state of Delaware. Let's find out. We'll dive into this deeper. But man, that's pretty favorable. IRAs qualify retirement income exemption, like we talked about, $12,500 on top of no Social Security. I don't know if that means if you're married, does that mean give you $25,000? I bet it probably does. Same thing, IRAs, 401ks, defined contribution plans, private pensions, public pensions, the whole thing. All right, so here's where my familiarity with Delaware is. The median home value is $230,000, and the median tax on the home value is $1,224. I mean, so $1,224 divided by $230,000. I mean that's 0.5%, my friends. That's significantly cheap. Tax breaks for seniors. Homeowners 65 and older can get a credit equal to half of school property taxes, up to $500. However, residents who moved to Delaware after December 31st, 2012 cannot receive the credit until they've lived in the state for at least 3 years. I 100% get that. Can't just move to avoid taxes. You got to move to establish roots there, and I have no qualm with that in the least. It only makes sense. If both people in a married household are 65 and older, only one school tax credit will be given to per household per year. Okay, so you can't get one for you and one for my wife. It's only $500 per tax filing unit, if that makes sense. If you're over 60 and older, you may be eligible for an exclusion if earned income is less than $2,500, and automatically. Okay, so again, that's on the way low. If your earned income is less than $2,500, that basically, I guess you're knitting and selling it on the side there, and essentially you can get some more exclusions on your taxes. Vehicle tax, state charges a fee for documentation. The rate is 4.25% of purchase price, or NADA book value, whichever is greater. Okay, so 4.5% or 4.25% on a $20,000 property is just for documentation. 4.25%. That'll cost you $250. Yeah, $250. As Delaware estate tax expired last year, the state exemption. All right, so there is no more inheritance or estate tax. So far, so good, man. Where Connecticut was killing us, Delaware surprisingly is quite favorable. What did Kiplinger say? They say they're most tax friendly, or in the top mixed, man. No, they're tax friendly. Okay, tax friendly. All right, so now let's go back to Tax Foundation, see what they say about the great state of Delaware. And here we go. All right, so far I'm quite impressed with old Delaware. All right, so as top individual income tax rate 6.6, state and local income tax collections per capita $1,200, state and local tax burden 10.2%, which ranks in the top 20, which we don't want to be. Tax Freedom Day is April 18th, which ranks in the half. Okay, so you got to be careful when we start looking at collections per capita, simply because that is not solely retirees. That's earned income that people are generating. That in of itself doesn't mean much to me. The local state burden might mean something to me if we're talking about just going there to start working or working. We're talking about retirees is going to be a little bit different, and that's why the smart asset calendar or calculator helps us a lot. So that right there would lead some to believe, oh, Delaware is high in taxes for retirees, and I don't think that's the case. I mean, look at this. $855 per capita is your real estate tax. I mean, my goodness, that's nothing. 0.5% like I said. I mean, they're ranked in the bottom in terms of this, which is good. They're ranked in the bottom 5 essentially on property tax. So that's pretty good. Sales tax. No sales tax. Gasoline tax ranks low, in the bottom third. And if you smoke, they're going to get you $2 and a penny on per pack of cigarettes. So Delaware is not favorable if you smoke. Just property taxes real quick. Am I missing anything? Nope. And individual taxes? No. So I tell you what, Delaware looks pretty favorable. It looks pretty favorable. So let's go to Delaware here. Did it grab it? I don't think it did. There we go. And Delaware's on the beach too. They got beautiful Rehoboth Beach and whatnot. Nice. I mean, it's gorgeous. All right, so remember what we did before: $25,000 Social Security income, $25,000 of retirement income. and born in just going back 1953, just because we want to be below the Social Security threshold where full retirement age is 66. And I don't think we had a pension here, or did we? No. All right, so basically $50,000, and you are going to pay nothing in taxes to the state of Delaware. $50,000 here, $75,000 total income, and you're going to pay $418 to taxes in the state of Delaware. Yeah, that's pretty fantastic. Because remember, you're getting somewhat of an exclusion there. I think it's $25,000. It's $12,500 per. I'm not sure if that's per tax-paying unit or per individual, you and your spouse. $418 on $75,000 of gross income. That's not too shabby. Let's throw a pension there of $15,000. I'm just crunching some numbers here. So now we got $90,000, paying $1,100 on $90,000 to the state of Delaware. That's pretty favorable, my friends. I'm pretty impressed there. I don't know what the cost of living is in terms of the housing. I think they did say the average housing cost was, let's see, was it Kiplinger's or was it here for property tax? Maybe it was Kiplinger's where they said what the average median house was. I think it was 200 something. Let's just go back real quick. All right, let's see what the price of the house was. It got me. Yeah. All right, so let's see what they're saying on the housing. Do they give us a median on the housing? Of course, websites typically do. Let's see. Property tax. Yeah, there you go. So the median value of the house is $230. I mean, that's not crazy expensive, not like California was, or even Colorado. So Delaware and up in the Northeast is still favorable for seniors or retirees. There's just no two ways around that. Much, much more favorable than Connecticut, which is just a hop and a skip up to the north. So, hey, good job, Delaware. I mean, I know that's where Bill Roth came from, who's my hero, because that's the Roth IRA. But the days of Republicans in Delaware are long removed, that's for sure. But they haven't, from the facts are they've kept up nicely from a tax-friendly perspective, and I'm glad to see it. So hope that helps you. As always, don't forget, thumbs up. Don't forget to subscribe. Don't forget to hit the little notification bell down there to be notified of future content. Share with your friends, the Heritage Wealth Planning YouTube channel. Comments are always helpful. I'm telling you. What's your thoughts? You've looked at Delaware. Maybe you're moving from New Jersey. Maybe you did move from New Jersey or PA down to Delaware. Thoughts? And yeah, I'd love to hear them for sure. And don't forget to just let me know. Go to heritagewealthplanning.com and go onto the website and see the blog and the other videos and the podcasts that we do there. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.